Hello, and welcome to another episode of the Market Snapshot series. I'm happy to be back. I had taken a small 1-week break. So today we'll be looking at quite a number of things. One of them is the top events that we are expecting in the markets this week. We will be doing some form of technical analysis to understand what chart patterns are currently present and potentially identify trading opportunities for the day. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So good morning, Masharia, and thank you for joining the session. I really appreciate this. So also, we are celebrating hitting 25,000 subscribers for this channel. So if you have not subscribed yet, make sure to subscribe. It basically lets you know whenever we have a live session. So hello, Carlos Ochieng. Thank you. Thank you for your response. So let's get things going. Hi, Charles. So I'll be starting with quite a number of key market highlights that are currently present for the day. One of them will be the most recent update that in the early trading session, the Shanghai Composite Index closed 1.47% lower, basically indicating that a majority of the Chinese stocks were trading below or in the red. Then we have the news that the FTSE 100 or the London 100 index has fallen to a 2-month low. Then another key highlight is that palm oil trades below the month-to-year level of that 750. China stocks sink to multi-month lows. So we're also seeing a big sell in Chinese stocks. Turkish consumer morale at a 3-month high, meaning that there is renewed confidence in Turkey. European shares flat as investors eye the ECB as well as earnings. Stocks in the UK hit 6-week low. The Nikkei 225 index traded 0.81% lower during the Asian session. Euro remains below 1.06 ahead of the ECB meeting. European markets head for higher open, and lastly, Danish consumer confidence showed some improvement. So those are some of the key highlights in the markets this morning. So looking at the economic calendar, we know that there is literally nothing happening today. So as you can see, the top news for the day is the German Buber monthly report and the consumer confidence survey, but both are expected to be of low or medium impact in the markets. So this basically means that Monday is officially a price action traders territory, where you don't focus on the fundamentals, you majorly focus on the technicals to identify potential market opportunities. So the key highlights for the week are 2 central banks announcing their interest rate decisions. So the first one will be the Bank of Canada, which will be making an interest rate decision on Wednesday at 5 p.m. So it will be releasing both the monetary policy report as well as the Bank of Canada rate statement, and of course, at the same time, the overnight rate. So the overall expectation is that the Bank of Canada will continue holding interest rates at the current level of 5.0%. And in that case, it may imply that the Bank of Canada may have ended the rate hiking cycle, and now we could potentially be looking at rate cuts in next year. So for now, holding interest rates level at 5% seems logical since inflation has been coming down. But then if we see more pressure on the inflation side, then it could add the pressure to the Bank of Canada to continue tightening policy. So the other key event will be the interest rate decision by the ECB, or the European Central Bank. So this will be happening on Thursday at 3:15 p.m., where you'll see the vote on main refinancing rate. So the overall expectation is that the ECB holds rates level at 4.50%. Of course, they will also be releasing a monetary policy statement. And then 30 minutes later, at 3:45 p.m., we'll see the proceeding ECB press conference. So these 2 key events are expected to be the most volatile for the week. And of course, for the US dollar traders, I think the day where we expect the highest volatility will be on Friday, when we see the Fed's favorite measure of inflation, which is the core PCE price index data, which will be released at 3:30 p.m. So the overall expectation is that the core PCE price index increased by 0.3% in the last 1 month. And this, if it comes through at this level, it would be a sudden increase compared to the previous reading, which was a 0.1% increase. So besides that, there's more news that we'll be expecting within the week. For instance, tomorrow and in the morning, we'll be seeing the Bank of Japan core CPI, which is a measure of inflation in Japan and is expected to be holding steady at 3.3% year over year. We'll also be getting UK jobs data, where the UK economy is expected to have created 2.3 thousand jobs. And this is within the last 1 month, and unemployment rate is expected to have held steady at 4.3%. Then we'll get a series of flash manufacturing PMI data, basically coming from the S&P Global. So we'll be getting a release for the French economy, for the German economy, which both affect the euro. Then we'll be getting the same report for the overall Eurozone, flash manufacturing PMI as well as services. Then for the UK, and this still on Tuesday at 11:30 a.m., then later on, we get the same data for the US. So it's one company, S&P Global, that basically releases all these reports. So we'll be focusing on them to see the trends in manufacturing, as well as the services sectors across these economies. So besides that, we'll be getting inflation data from Australia on Wednesday, where we'll be getting both the quarter over quarter as well as year over year readings. So quarterly, we expect the inflation to have increased by 1.1% in the third quarter of the year. And of course, year over year, we're expecting an annual inflation of 5.4%, which is slightly higher than the previous reading of 5.2%, basically implying that inflation pressure is coming back. So we'll get the German IFO business climate survey at 11 a.m. on Wednesday. And then after seeing the Canadian data, we'll look at crude oil inventories, and then the Bank of Canada press conference at 6 p.m. So there'll be two more speeches that are quite relevant for the markets. One is the ECB President Lagarde speaking at 8 p.m. on Wednesday. And of course, the Fed Chair Jerome Powell will be speaking on Wednesday at 11:35 p.m. So later on, we'll be looking at the unemployment claims in the US as we approach the NFP week. So remember, the non-farm payrolls week is next week. So here we look at the weekly unemployment claims. Then we also look at GDP data from the US. So there will be advanced GDP quarter over quarter at 3:30 p.m. Core durable goods orders, as well as advanced GDP price index, before we look at goods trade balance for the US. Then the ECB press conference, as usual, that is after the rate decision. Then we get the Tokyo CPI on Friday early in the morning, Australian Producer Price Index, Reserve Bank of New Zealand Statement of Intent, Spanish flash GDP, and then core PCE Price Index. So as we approach the end of the week, we'll be getting a speech from FOMC member Barr, and of course, revised University of Michigan Consumer Sentiment Survey. So that's basically a summary of what we will be expecting in the week. And of course, this looks like an action-packed week with events happening across different pairs. So as we can see, the most volatility is expected to be experienced by Euro traders because of the ECB decision. The UK traders will be getting the jobs data as well as the flash manufacturing and services PMI. So the GBP could also be having some volatility this week. We also expect some good volatility coming in from the Canadian dollar, especially after the announcement of the interest rate decision. Some volatility from Australia due to the inflation data. And of course, for the US dollar, due to speech from Fed Chair Powell, as well as the core PCE price index, and later on revised consumer sentiment survey. And of course, we have also seen that the GDP data for the US will be coming up on Thursday at 3:30 p.m. So those are expected to be the most volatile pairs for the week. However, besides just looking at that, there's also this issue of the Japanese yen. So we know that 2 weeks ago, we saw this happening. It was 3 weeks ago. It was basically last month. So on the beginning of this month, trying to check the date. So this is on the 3rd of October this year. So that basically makes it 3 weeks ago. We saw the Bank of Japan intervening in the currency market after the USD JPY currency pair had broken the 150 price level. So after the intervention, we saw a very big spike downwards where the market later recovered and traded sideways for a while before pumping even higher. And from then, we have seen the market attempting going up before we had this sharp spike that looked like another intervention. And this was on the 17th of October. So since then, the market has basically moved sideways with a slight incline. And eventually the market happened to hit the previous high of 149.964. And now it is looking to retest the 150 price level. So once we get to that area, there's a lot of concerns in the market that the Bank of Japan may intervene yet again, and these would be expected to cause the USD JPY currency pair to drop further backwards. So this happened here, so it could also happen again because the Bank of Japan is really determined in defending its currency so that it doesn't trade above 150 price level. So this has happened again. So the last time this happened was back in 2022 on October 21st. And since then, the Bank of Japan kept intervening until the currency dropped to levels of around 127 to the dollar. So now that we are seeing this scenario play out again, if you are a trader who is majorly focused on trading the USD JPY pair, you should be very careful because an intervention could literally blow your account, especially if you're on the wrong side of the market. So in this case, this area is very, very important to be monitoring, such that when there's a breakout, you could be able to take advantage of that breakout. So as for now, the bias remains to the upside, and the market keeps pushing higher unless there is an intervention. So monetary policy is indicative of a strengthening dollar and a weakening Japanese yen due to the carry trade. But then if something happens in between this area, then the potential for the market breaking downwards becomes significant if the Bank of Japan were to intervene. So for now, the bias is to the upside, but then if there's an intervention, then a big spike downwards could be expected. So with the dollar index, we saw it recovering after a series of data indicating that inflation is on the rise, which could pressure the Fed to go for more rate hikes. But then the Fed is looking to wait it out and potentially hold rates at the current level, seeing the economy take the full effect of the rate hikes that were implemented previously. So as a result, what we are seeing here is a dollar that has been moving sideways for a week. But then if you take a bigger look in the 4-hour chart, this is what we are looking at. A dollar that was very, very strong, rallied all the way up and got to this high here of 107. But then if you look at the trend lines, they were indicating a market that was strongly going upwards. So this is what we were looking at. But then if you look at the sequence of the most recent lows, then you can see that the dollar index has really weakened. And of course, from the highs, you can also observe that the market is currently unable to form higher highs. So with this in mind, it's enough to say that the current range, the one happening on this 1-hour chart, it basically means that the dollar index is moving sideways. So unless we have something fueling the markets, I would be expecting to see the continuation of this sideways momentum. So potentially the dollar index dropping to this trend line, finding support, going back upwards and so on. So I don't expect much volatility from the dollar unless there is something that is huge happening in the markets. So while right now, or in the last 4 or 5 hours, we have been seeing the dollar index erasing the morning session gains. So market opened here, went up, now we have erased those gains. At some point, I will be expecting the dollar to start regaining strength and moving upwards. So looking at the majors and trying to understand what's happening. So as the dollar weakens, the other currencies keep gaining. So for pound USD, you can see the price basically erasing area losses and moving higher. But then notice that there's this resistance level that has been holding for a while, and the market may be almost exhausting the upward momentum. So this is a key trend line to watch, especially if you're trading pound USD, because there's that potential that the market would find resistance and potentially change direction from this point. So a very important trend line. And of course, if you check the price level, this is around 1.21911. Then we have USD JPY. We have already covered this. We have Euro USD, also doing the same thing, attempting to get to last week's high. So last week's high was all the way up at this area here. So now that the market has broken Friday's high, now it's headed even higher, looking to retest at Thursday's high. And once you get to this area, it's a potential changing point where the market could change direction. And this really depends on how the dollar is reacting in the markets. So as for USD CAD, you can already see the market changing direction. So price was literally headed higher to last Thursday's high. But then you can see the dollar taking a step back and the Canadian dollar now beginning to strengthen against the dollar. So in this case, this could be a level that is holding as resistance, and we could be seeing the market make a pullback, especially considering the price action that we are seeing in oil. So speaking of oil, this is what we are currently seeing. A very nice trend line that was formed from this bottom or low price in the market. Market gets back to this point, gets another low point, which helps us draw this trend line. And now as the market got back down to this area, you can already see the strong price action of bulls entering this market. So with the current destabilization of the Middle East area and potential expansion of the current conflict between Israel and Palestine, there is a potential that we could be seeing higher oil prices. And now this looks like a really good value area to make an entry. So there's a high likelihood that the market will keep going up and perhaps retest Friday's high for the day. And this could be a nice entry area, especially seeing the market hold this level. So as for gold, this is what we are currently seeing, a very strong momentum upwards as investors take flight for safety, considering the current effects of the war in the Middle East. But then the current level seems a little bit suspect. So based on this sequence of highs that we saw previously, market finding resistance here, and then here, and then here, and then a very strong rally that has lasted 2 complete weeks. We saw the market finding resistance in this area, pulling back downwards, but now it's retesting the area again. So I think 1984 is a key price level for this market. So this is a key decision point. So the idea is now to look at what price does around this area here. So in this case, if there is a clean break, we trade higher. But then if the market is unable to break this area, then we place our trades towards the lower side. So 1984 is a key level to watch to understand how price may react around this area. So if it's unable to break, go for shorts. If it breaks, then there is that potential that the market moves even higher. So for AUD-USD, we are currently retesting a major support level. So this is a support level that has held for 2 consecutive weeks. So now on the 3rd week, we could be seeing the market retesting this area. So it acted as a bottom here and then a bottom here. Last week, it didn't manage to get back all the way down. And now this week, we could be seeing the market retest the area again before making further momentum. And now that we are seeing weak dollar, we are seeing the market stall a little bit, but then I would be expecting the market to at least make a run for 0.62875 before making another move. So US equity indices have been on the drop. Last week was a big sell-off. I managed to identify a nice resistance point. And since then, the market has just been going down towards our target area. So the target area has not been hit yet. And this is for the NASDAQ 100. So 14,439 is still our target. So now we are looking at a potential further drop towards this area. So as for the S&P 500, it found resistance in this area, yet going down, and we are yet to get to our target, which is all the way down the 3-week bottom of around 4,200. So as for the US 30 or the Dow Jones Industrial Average, big thing happened here. Basically tested an area that was support, now turned into a resistance. And once it got here, there was a sharp drop, and we are yet to experience this bottom here. So there's a high likelihood that the market will drop further to 32,812. So as for the French 40 index, it's clearly a breakout. We saw this level holding as support the first, second time, third time. But then after the big rally here, the market changed direction and kept going downwards. So I remember checking this area as a potential bottom. Market eventually went up. But then now that we have broken the lower trend line, there is indications that the market will keep going downwards. And now we keep watching the previous support. So from the forward chart, if you zoom out, you'll notice that we are now retesting a major support area here. So this area was acting as a previous low. And now that the market has retested this area, the idea is now to watch the price and how it behaves around this area. So if there's a strong down bounce, we start looking for bullish positions. A clean break, then we basically look for short selling positions. So the USD trading against the Chinese yuan eventually found the upper trend line. So this is the pattern we are working with. A market that is moving along this channel found the resistance here and is now pulling back downwards. So we could be seeing an acceleration of the same. Basically, the dollar losing against the Chinese yuan as China continues supporting its currency. So for the EU 50 or for the Euro Stocks 50 cash index, we are seeing a big test of this trend line, and potentially a clean break would mean we trade much lower. So the market hasn't made a clear momentum downwards, save for the last 1 hour candlestick. So the close of this candlestick will be important. For instance, if there's a complete reversal against the previous candlestick, then we know we are going up. But then if it's a continuation and the candlestick closes in the red, then it would basically mean an opportunity for further short selling. So we saw a big spike happening in Bitcoin, continuously running high. And now traders are currently enjoying levels above 30,000. But then we know this has been cyclical for a while. So potential for a pullback remains significantly high. And of course, we know that the previous resistance was around this area here, 30,195. So potentially we could be seeing the market going for a retest before making a continuation. So a drop further back downwards to 30,195 might be in the books. So New Zealand USD currently ranging. If you go to the 15-minute chart, then you can clearly identify this range. And all you have to do is be patient and wait for the market to make a breakout in either direction. And this would basically give you a very nice entry opportunity. So just be patient, wait for the market to break out of either this or this, and then you go for your trade. And lastly, we have the USD against the Swiss franc. We know that this market has been holding this trend line for quite some good time since July, but now we saw the market breaking towards the lower side last week and continuing to press lower, basically meaning that the dollar is now taking a step back against the Swiss franc. So now we could be seeing some further continuation of this momentum, and now the market is looking to retest the previous low. So this could be retested, which served as the bottom on Friday. So we could be seeing the market going for 0.89031. So as we proceed, I'd like to check if you guys have any questions and try to respond to them. Morning, Charles. I can see Martin FX in the house. Good to see you, Rufas. Thank you, FX Apprentice. Thank you, Moneki. Vago Productions. Morning, Lord of Shorts. How comes Kenyan banks don't allow forex traders to open dollar accounts and insinuate anti-money laundering rules and lacking forex license from CBK? Let me read this again. Kenyan banks don't allow forex traders to open dollar accounts. No, you are allowed to open a dollar account. I don't think there's any limitations on that. you can always open a dollar account and you can use that dollar account to make a deposit with a Forex broker. That has never been a problem. Hi, Met Money, Malombe, and Willibet. I'm happy to see you guys. I hope I was fully supported when I was absent. What's the main difference between reversal and retracement? What does it mean? When we talk about retracement, it's pretty simple. I think there's different ways of viewing this, but I'll try and explain it in a very simplistic way. So let's say, you have a chart. Sorry for this. I'm trying to draw something here. Yeah, okay, that worked. So let's say you're looking at a market that is moving up, and then it starts moving back downwards. So I am assuming that the question you're asking is, how do you tell if this is let's say this is the original move from a point of origin to a point A, and now the market is moving back downwards. So how do you tell if this is a pullback or whether it's a reversal? So you can never really tell until you experience it. So some traders will use different measures. For instance, for stock traders, if a stock is down 10% or below, they consider that as a pullback. And if it's down more than 10%, then they consider that as a correction or basically a reversal. So in that case, they will consider exiting their positions. So if a stock has pulled back downwards 1%, 2, 3%, 4, 5, as long as it hasn't hit 10%, they consider that as just another pullback. But then if it's more than 10%, then they get out. So for Forex traders, there's different measures. Some of them will choose to use, let's say, Fibonacci retracement levels. So for Fibonacci retracement levels, we know that there's different levels. There's 23.6, there's 38.2, 50, and of course the golden ratio. So the golden ratio, which is I think 62.8, tends to be 67.8 tends to be the breaking point for Forex traders. So if an asset pulls back downwards more than 67.8 backwards, then that's considered to be a reversal. So if, let's say, you're watching this chart and the market keeps going back downwards, so from this point, it keeps going down and it breaks the Fibonacci level, then you know that at that point, the market is headed all the way back down. But then if it's within this area, then the potential for the market jumping and continuing the original trend still remains relevant. It would be at 23.6, at 50, as the golden ratio. But then if it breaks that area, then you expect the market to go back down. So I hope that explains it. And I really hope that it's clear for everyone. So to those who may not have studied the Fibonacci levels, I think it's a welcome idea to now start checking it out. Tech is often very heavily weighted in the overall markets, so keeping an eye on this week's earnings could provide some clues and potential insights into the coming months. What does this statement mean? So definitely, there's a lot of earnings being reported this week, and this is drawing out of investors' attentions. So the most important thing to note is that the current stock market rally, especially in the Nasdaq, and the S&P 500, they have both been driven by what we call the Magnificent Seven. So the top seven tech stocks basically have contributed to around 90% of the growth that we're experiencing in the NASDAQ and the S&P 500 this year. So now investors are watching those earnings because 4 of the 7 companies in the Magnificent Seven are reporting their earnings this week. So the key highlight, of course, will be on Google or Alphabet, as well as Microsoft. So Microsoft will also be reporting earnings. This will be on Tuesday. Google will also be reporting on Tuesday. Its parent name is Alphabet. Then we'll be having more companies reporting, and then there will be Meta Platforms, which is among the Magnificent Seven. This is the parent company to Facebook. And of course, after we see Facebook earnings, I think the other company to focus on will be Amazon. So trying to peruse through this. Yes, so Amazon will also be reporting on Thursday. So once we get that, then we have an idea of how the market is looking like. So Alphabet, which is Google, Meta, which is Facebook, Microsoft, and of course, Amazon. So once we get those 4 earnings, they'll show us the direction that these companies are going. So if they have better than projected earnings, or they beat the earnings projections, it will basically mean or imply that the AI boom continues and we continue seeing some more upside in equities. But then if these companies, 4 companies then generally take a hit on their earnings, then it could mean that we continue seeing downside pressure on the US top equity indices, and that would be a premium short selling signal. So I think that's the forecast that investors are taking this week. My favorite pair, Pound USD, is held in a range. What would you advise? Well, if Pound USD is your favorite pair, then you are bound for a good ride this week. So for now, I think we have these 2 trend lines here, but the most important one is the one we are headed to test. So the key price level for the day is 1.21911. So just observe this area here, and what you're looking for is evidence of a strength of bulls breaking above this area here, or evidence of bearish entry at this area here. So if you see bears entering at this market, then you know what to do. And of course, if there's a clean break, then we both know what to do. Gold has an outsized move in October 2023 in relation to the DXY. Other than Middle East crisis, other risks that pushed it down persists. May feels the overextended rally nearing a pause. Technically, for gold, I showed you a very suspect level, 1984, and from the previous price action, you can already see that level playing out. So this area held as a major resistance level. So the potential for gold making a reversal from this point onwards is quite high. But then judging by the demand we are seeing, especially resulting from what's happening in the Middle East, it's also likely that the price of gold could continue rising. And this was a similar story with what we saw in gold during the invasion of Ukraine by Russia, and that was in February last year. So in Feb last year, this is what we saw. So I'll try and get back to the same level. This is when we saw gold accelerating and kept going up. And I think the price level that we saw as the highest was around 2071. So this momentum could also be experienced this time. So now that we are seeing gold make this rally and get to 1984, there's still more room for upside. So while this level is quite suspect, I expect gold to potentially break this area and keep going higher as investors try to take flight for safety to avoid the risks associated with the developments in the war. Very clear on difference between retracement and reversal. Thank you. So when you're opening your account, you open a personal account or a checking account, make sure it's dollar denominated. You don't have to specify that it's for Forex trading. It's just a normal account. You just use it for deposits and withdrawals to your brokerage. Which direction do you see the NASDAQ giving this week? I think I've just explained that the key drivers of the NASDAQ has been the Magnificent Seven. And now that we're expecting 4 top earnings from the Magnificent Seven, that's what will determine the direction of the NASDAQ. So while currently it's extremely bearish, I think the outcome of those 4 earnings will have an impact on the direction of the NASDAQ 100. So expect some good volatility, but for direction-wise, I expect a reaction from the earnings reports. So lastly, comment on CAD CHF. So that's the last thing I'll be doing for the session today. So there's this request to check on CAD CHF. I normally don't do crosses because once I analyze USD CAD and USD CHF, then you can draw conclusions on CAD CHF, which is a derivative of both the 2 currencies. So this one, without looking for me, it seems like a bearish inverted flag. So it's very easy to understand that this was a very strong bearish momentum. So if you think of this as a flagpole, then you would obviously see that this is now a flag where the market is now consolidating, trying to determine the next direction. And if this is what you are following, then you know that all you have to do is to be patient and then wait for the eventual breakout. So this is your inverted flagpole. This is a channel that the market is following. So basically wait for your present breakout. So thank you guys. Thank you for your time. I really appreciate you. And I hope to see you on the next session. So remember, tomorrow is Tuesday. So we'll be having another session, trying to understand the developments of today, any other developments in the international markets. And of course, we'll be discussing deeper on the events that will be expected for tomorrow. So thank you guys. See you then.